Australia's residential housing value hit $11.3 trillion at the end of April to now be worth 3 times as much as all super combined and 4 times as much as Australia's listed stocks. That's massive. In this episode, like I do every single month, we'll be going through the latest deals that I've posted in my Facebook group, Australian Property Mastery with PK, over the month of May. We'll go through positive cash flow deals that have gone up like 50% in just 2 years, deals that are off market, under market value. I'll share the deals, the clients, how we got them, where we got them, so that you can also get these deals, build financial independence, financial freedom, and become financially happy, like all the clients that have bought these deals. We know so many pockets of Australian housing will continue to boom. For Queensland to meet its share of the government's housing building target, 4,100 dwellings need to be approved every single month. And as of March and April, they're only running at about 3,000. So there's not enough supply. House prices are going to increase so much more. These deals are the people that are in it and are winning it. Let's go through 10 deals. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent. Every single time this channel, we expose the reality on the economy, the housing market, and financial happiness. Hit the subscribe button, give it a like. All the deals that I've posted have been in this Facebook group, Australian Property Mastery with PK, with 65,000 members. The clients are tagged. You can interact with them directly without me as the middleman by DMing them directly. Once you join the group, I've posted more than 3,500 deals over many years. These are the ones that I posted in the month of May. They're all verifiable and they're not cherry picked because clients literally buy a property every single day through my mentorship program. Deal number 1, 6.6% yield off market. Ugly Duckling grows 48% in under 2 years. Now just understand this, over the last 10 years, Australian house prices nationally, according to CoreLogic, have gone up 78%. You might think, oh, house prices have doubled, like every 5 years they've doubled since COVID. Actually, according to research houses, nationally, they've gone up only 78% in the last 10 years. That's actually less than most decade-long periods. So there's a lot of latent potential. But if you pick the right market, the right suburb, the right property, you get these results that Tim Ablett has. You can see he's tagged right here, who's made 50% gains in under 2 years. This is how financial independence, freedom is accelerated. So you don't have to wait 30, 40 years. You can get it in 10 plus years. The seller had already completed a $100,000 renovation. And that's the thing. You want to be buying properties that are low maintenance. And if the seller has already done that hard work for you, perhaps overcapitalized, as long as you're not paying for the entire renovation yourself, you're getting a bargain, then you get a property that you don't have to worry about for years and years and years. They really shouldn't have sold this one. It was not on Domain or realestate.com, so it was off market, and he therefore achieved $40,000 of instant equity. Literally, when he signed the paper, just made $40,000 equity, adding to his net worth. I mean, that's the beauty of property. You get the right deal. As soon as you sign on the dotted line, you've made like tens of thousands of dollars, provided you do it right. He did this without a buyer's agent, moving from no confidence to full confidence through the Property Investment Accelerator. Bought it for $380,000. Total funds required $65,000. Rent is $485,000. And you can see the property right here. I mean, it's nothing amazing to look at, hence the tag Ugly Duckling, but it's the numbers that matter, not what the property looks like to you and me. Number 2, positive cash flow. Yes, even in the current rate environment, 8.4% yield property grows 180K or 39% in under 2 years. So these aren't flukes. Data gives us predictability and reliability. Education is inoculation against making decisions that lead to mistakes. Who said you can't have both? Like anyone buyer's agent that says high growth and high yield are trade-offs, run a mile away from them. You can get them every single time, and I've proven that over 3,500 times across almost a decade. 2 properties settled on the same day, Abinav did. This one was a 422. Bought this with our buyer's agent, purchased for 465. Here's Abinav here, great guy. Needed less than 90 grand to get in, 750 a week in rent. Great data, 30 to 35 data factors. factors we look at more than anyone else in Australia. And that's why when you have those checks and balances, you almost can't make a mistake even if you wanted to. Rent is $750, vacancy rate is 0.59, and the block size is 510, built in 1999. Brick, he bought this in Perth from Brisbane. Here's the deal, and here's him and his lovely wife. This is a second property now, Abinav's, that is, the 6.8% yield property, which has grown 200k or 53% in just 18 months. So this has even beaten Tim Ablett's, which was 48% growth in 2 years. This is less period of time, but higher growth. Once again, anyone who says that you need to make trade-offs, I don't care if they've been investing for 30 years, they simply don't know how to optimize your property investing. 2 properties on the same day, neat and tidy, just kind of like a hold forever property. You don't have to worry about this one too much. He's bought 2 as of this deal, therefore saved himself $30,000 in buyer's agent fees. Abinav, same guy. Purchase price $374. Total funds required $65,000. Rent per week is $490. Great short and long-term data. Great vacancy of 0.53. 603 square meters. Bought this in regional Queensland, where there's a chronic rental and housing shortage right now. From Brisbane, he bought this remotely without catching any flights. He had his local due diligence done by the team we provided him, local property manager, building and pest inspector, and he's just been self-sufficient because he knows how to invest in property with full confidence through the mentorship and data that we provide. And he's just doing it from literally the convenience of his own home, just buying properties again and again and again, rinse and repeat, and building passive income. Here's his second deal. Number 3, same Abinav has bought this one, a 10% yield positive cash flow property, which is off market. Once again, another ugly duckling. It's boomed $100,000 in over just a year. Once again, ugly duckling, something that doesn't look good, that actually might be a gold mine if you scratch the surface and understand the data. This was originally a 3-bedroom, 1-bathroom property. He did a $51,000 renovation and converted it into a 4-bedroom, 2-bathroom property plus a games room. Hence, that value has skyrocketed. Once again, this wasn't on real estate or domain. He built fast, easy, quick relationships with sales agents that you don't need a buyer's agent to do. You can do this yourself very easily. And that's why he's able to get these sharp deals that most of the public doesn't see. Most investors, in fact, even if they did see this, they would skip it because it doesn't look that great. You can see here, the property doesn't look amazing from the outside, but all you need is a few of these and you can retire early. I mean, 10% yield, that's pretty phenomenal. 430 purchase price, 85,000 is what he needed to buy it, 825 a week in rent. Great data, 0.59% vacancy. Block size 751, bought this in Perth from Brisbane. And here's the deal, once again. Number 4, Abinav, again, this is his 4th property, saving himself now $60,000 in buyer's agent fees. That's exactly how much capital you need to buy a property in 2025. You don't need so much, just $60,000. This, once again, is a crazy 7.9% yield, positive cash flow property with granny flat, and it's really helping him with early retirement. It can help you too. I'm trying to open up everyone's eyes and see what's possible, because a lot of you are buying really average properties through buyer's agents or nothing at all because you don't know what's possible. Recently built granny flat, and it's an absolute cash cow because of that. Granny flat at the back, doesn't cost much to maintain, but almost doubles the rent. Good depreciation tax benefits as well, and this is growing fast. So we'll continue to do so because how do we know? Because the data tells us so. Bought 4 times now, like I said. This one was $510,000, needed $100K to get in. The market rent per week is $775. Great data, 0.75% vacancy. Block sizes 718 square meters. Big blocks. We're not buying small blocks, right? 300 square meters, 400 square meters like you get Northwest Sydney, Western Melbourne. We don't want that. Land appreciates, buildings depreciate. Built 1991. This is bought in WA from Brisbane. And look, there's just too much misinformation online, too many courses, too many buyer's agents, everyone's selling you their angle, and therefore it's easy to make mistakes. But data doesn't lie, neither do numbers, nor do these types of results. I mean, if you don't believe me, just DM him. I mean, you can take me out of the picture. DM 100 other clients, 1,000 other clients. They're all tagged in my Facebook group with more than 3,500 deals. They've in total saved themselves over $50 million in buyer's agent fees and made $1 billion in equity ever since I started teaching this. You can interact with them directly. I know trust is hard to build. Like, I get it. I've also been a consumer, also ummed and ahs. Is it too good to be true? Can I do it? Do I have what it takes? When you reach out to other clients without a filter provided by the buyer's agent or the course provider, then you can gain real trust because you get the brass truth. You hear from the horse's mouth without any screening. That is what you need to build trust in the course, to build trust in property investing, and build trust ultimately in yourself. Data plus mentoring can truly accelerate your property investment journey and financial freedom roadmap. The science of property investing also is not a part-time job. It can be done quickly. It can be done easily. I think that's really important. It doesn't need to be a part-time job. 3 to 5 hours a week over 1 or 2 months, you can get these results. And Abinav here is testament to that. Number 6, Sydney man Jyotish Joy, who is tagged here, buys 6.4% yield Queensland property. Just a few of these are required for a stable retirement. The government pension, I don't know, it's $30,000, $35,000 for a couple. Can you survive on that? Like, honestly, look yourself in the mirror. Can you honestly survive on that? And you might be saying, look, I'm going to work hard, have a big war chest, $1 million in the bank. First of all, I'm not sure many of you will get to $1 million in savings, pure savings, by the time you hit 65. Even if you do, that $1 million isn't going to take you through to the age of 80 or 90. You need to build passive income that continues to come in when you don't work, when you stop working because you either want to or you have to because of health reasons. $70,000 capital growth in 7 months. And that's generally what data allows us to do. 10,000 a month. I've seen that over years now, not just in COVID, before that, after that. Good data allows that rate of growth in most instances. This has got a double bay shed, which is great for tenants, and it's a quiet cul-de-sac. Jyotish has bought this for $545,000, $120K needed to get in. Rent per week was $670, 0.19% vacancy, block size 700. Bought this in Queensland from Sydney. And look, I just want to say, like I always do, don't risk giving the keys to your financial future, which is very important to you, right, to someone else. Okay, no one cares about your money as much as you do. Don't become dependent on any property company for every single property purchase. You're just throwing their money, something that you can be doing yourself and also better. Believe it or not, I know you doubt yourself, but you can do this better once again because no one cares about your money as much as you do. They're not professionals. Property investing is not like surgery. It's like gardening. Anyone can learn it. And if you see a weed, you're going to take it out. If a gardener sees a weed, they may not take every weed out. That's somewhat of an analogy of how much care goes into buying a property that others won't do as well as you will do for yourself. Don't pay a buyer's agent $15,000 to send you properties off real estate or domain or off market deals that you could be getting yourself. And lastly, don't be fooled into buying some ineffective bait and switch course from all these buyer's agents that then upsell you to their full service because the course didn't work. It was designed to teach you what to do at a high level, but not how to do it and why to do it. Therefore, it was only a stepping stone to you then ultimately paying them $15,000. You don't want to do that. You don't have to do that. They will never sell you a course that actually works because that makes their main higher price service obsolete. I know this sounds negative, but I mean, someone's got to say the truth. Number 7, huge 6.8% yield under market value deal, bought 1 kilometer from the ocean. This was done by Manav Honda. Bank valuation was $90,000 higher when purchased. I know bank valuations can often be optimistic. You're probably thinking that, but this one was actually pretty on the money. Maybe it was a bit optimistic, but he's still bought this way under market value. Solid as an axe, masonry built. Okay, it's not even brick, it's solid masonry. And it's a massive 832 square meter block. Fantastic land to asset ratio. We want that thing to be above 60%, maybe even 70%, because land appreciates, buildings depreciate. Bought for $435,000, needed $85,000 to get in. $750 went rent per week. 0.49% vacancy, 832 square meters, regional Queensland. Here's the property, huge backyard. Love to see that. Number 8, Jamal buys another crazy 7% yield, high cash flow deal off market with bonus tax benefits. This is not on real estate domain, once again, not available to the public. That doesn't mean you need to be a professional to get these. Anyone can get these deals. It's just about making quick relationships over the phone with sales agents. It's not some secret science. Don't let anyone mystify you into giving them a whole bunch of money for off-market deals. He's bought 2 now in 12 months under 500k, and this one's purchased under a trust, and it's grown $90,000 in under 10 months. Saved himself $30,000 in buyer's agent fees. Jamal has, and he's purchased this for $465, needed $90,000 to get in, and the rent per week is $630. Here's the property right here. Number 9, once again, buys a crazy 7.2% yield. Positive cash flow property Jamal does off market in a suburb with a vacancy rate of 0.07%. What this means is that rents are going to go up $2,000, $3,000, $4,000 every year for the next few years, and also it will have 0 vacancies because almost nothing to buy, because almost nothing for rent for tenants. So it's just a really low risk approach, and that doesn't mean that he's made any other trade-offs. It's just a fantastic property. Not on real estate again. Anyone who says that, oh, you need a buyer's agent to get off-market deals, I'm trying to demonstrate, right? These aren't cherry-picked. Like, this is pretty representative of what most clients do on a percentage basis, this amount of off-market deals. Bought 2 in 12 months, purchase under a trust again. This one's grown 70k in less than 12 months. Because he's bought 2, he's saved $30,000 in buyer's agent fees. $467,000 is this one, 100k to get in. Rent is $650, 0.07% vacancy, like I said, 733 square meters, regional Queensland, and here's the deal. And last one, Perth man gets 6.2% yield, booming property in Queensland. That's 4 investment properties in 2 years. Mohit Tandon has done that. Fantastic guy. You can see even people in Perth are now transitioning and not buying in Perth. I mean, he has bought in Perth before. He's been a client for a while. But this 4th property he's bought on the other side of Australia. So you can see that Perth is softening out a bit in terms of its rate of growth. And then the East Coast is actually heating up a lot now in terms of the property market. Beautiful split level home, just meters to the beach, and it has side access, so you can build a granny flat, maybe $100,000, $175,000 in the future. That will boost the rent by maybe $300, $400 a week maybe, and that will take it to huge positive cash flow proportions, and definitely in 10, 20 years time, with his 4 properties, he can easily think about retiring or at least reducing his working hours. He's bought 4 properties now, saved himself $60,000 in buyer's agent fees. I mean, if he had gone with buyer's agents, he wouldn't be able to buy this property, right? Because he would have given all the deposit to some company who doesn't care about him. Like, let's be honest, no one cares about your money as much as you do. Purchase price is $607,110. Total funds required less than $120. Rent $725. Vacancies 0.63. Block size 769. Built 1980. Regional Queensland from Perth. And here's the property deal. I know what you're thinking. PK, this is great. I mean, it seems to be pretty good deals. I can't really complain, but I just don't know if it's going to work for me. Let me share with you a quote. The main obstacle in life, the main obstacle is an easier path to a lesser goal. The main obstacle in your life is an easier path. Sure, there are easier paths, but then to a lesser goal. So you have to ask yourself, do you want to live to your potential? At least in the financial sphere, I can't help with your relationships and stuff. But in the financial domain, do you want to reach your potential? Like, let's say your potential by the age of 50 or 40 or 60 is $100,000 passive income, $150,000 passive income. Do you want to leave money on the table and not achieve that, not reach that, not attain that because you thought it was too hard? The main obstacle is an easier path to a lesser goal. You might say, I'm happy with just $30,000 passive income. Fine, it's your discretion. But why not try to reach your potential? And for that, yes, you might have to roll up your sleeves a little bit. You might need to invest in yourself. No one else is investing in you. Let's be honest. You might need to actually choose the slightly harder path, but to a disproportionately more valuable goal. Ask yourself, is that the type of person you are? Do you want to take care of your family? Do you want to be able to focus on your hobbies, your passions, create legacy, generational wealth for your kids so that I don't have to worry about financial stress? Do you want to be able to retire your husband or wife? Do you want to be able to just have no money anxiety? Maybe that is all your financial potential, but you're choosing an easier path to a lesser goal. I'm not preaching to you. These are all just facts that you can ruminate, throw around in your mind, and reach a conclusion after some proper study and proper contemplation. If you want to level up, I'll leave links below to my Facebook group, Australian Property Mastery with PK. Free, more than 60,000 people where all these deals are shared. You can get inspiration and education from so many of them, and therefore that might help you catapult to your financial potential. And also I'll leave link to my podcast on Spotify, iTunes, and YouTube, Oz Property Mastery with PK. There's more than 200 episodes. And I really encourage you, the most important real estate is the 6 inches between your 2 ears. Invest in that and your financial potential will be attained. Hit the subscribe button, give it a like. My name's PK. Thank you for being with me.